Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, April 3rd, and this is the weekly market update. Just a reminder that anything you hear in this video or on the podcast is not investment advice. Please do your own due diligence. It's your money, it's your responsibility. So, first things, I'm not going to go over Biden's infrastructure bill that he brought out. I considered doing it. You can go look at it yourself. Um, this particular chart here is from the Committee for Responsible Federal Budget. Good luck with that, I guess. But there is such an organization, and they've tracked all of these spending and do these projections about debt and deficits, which is very interesting. I find it uh, interesting to look at and amusing. There's nothing anybody's going to really do about it. I mean, I don't understand what lever of power you could pull to change the trajectory we're on. But that's not really the point of talking about this slide. What this slide shows is and it's on their website, which I'll put a link to in the show notes, tracking the COVID response. And what this is showing you is the amount of money or what has been done for the response to the disease that cannot be named that has a 99.7% chance of recovery if you get it. This end of civilization uh, thing that we have to do all these things that we're doing, shut the economy down and restrict everybody's freedoms. But anyways, this is showing that for administrative actions, and that's just things like delaying taxes, due dates, and things like that. That's cost so far about 500 billion of a authorized $900 billion. So it shows you what's been authorized and then also what has actually been spent up to the date. So they break all this down. You can get as granular as you want. But here you have like the legislative actions. This is the encompassing the original COVID bailout during the Trump administration and a subsequent one that's been passed. So you're talking about $3.6 trillion has been spent uh, of a possible 6 trillion. So these are huge numbers, folks. I mean, this is unprecedented. This is World War II-esque, if you will. You can compare a lot of the spending on as a percent of GDP is comparable to what we did during World War II when we were ostensibly, or if you want to listen to historians or people at the time, were in a civilizational fight for survival. And so and we're doing that over a you know cold and flu virus that's a little bit worse than the flu. Something else is going on here. So Federal Reserve actions, you got $120 billion a month being bought of Treasury securities and mortgage-backed securities by the Federal Reserve. They're authorized to spend up to $6 trillion. In the newsletter, I kind of expanded upon this. What Jay Powell has been saying that yes, he welcomes feedback and he has heard feedback that all of these things, these unprecedented responses could be at some point inflationary, but he just doesn't, they don't see it right now and they have the tools to respond. So go about your business, citizen. We can print money and spend it on ad infinitum and there's not going to be a problem. Don't worry, citizen. All of your betters, all of the elites, all of the masters of universe have completely screwed up everything that they've ever touched. We have it under control. And most of the people want to believe that. Most people would rather die than think critically. Most people would rather believe the lie than look at reality because it's scary for some people, for most people. Because when you look at the lie and it's exposed, then you realize that there is no big daddy or big mama government or big anybody that's going to take care of you. You have to do it yourself. So this is all fine. This is part of the whole crack up boom, reflationary deal that we've been talking about. All of the dominoes are lined up now. The pretty much the requisite political support from both parties. The right people are in there, and this is what we're going to do. And then he sprung a Biden or his handlers, whoever's handling him, because he's not really doing in charge of anything. A $2 trillion infrastructure bill, which if you look at, it's kind of like this COVID bill, right? Only about 10 or 15% of the money actually goes for anything having to do with related to COVID. The rest is sops to constituencies and plugged in people and grifters and rent seekers. It's the same thing with the infrastructure bill. If you look at the infrastructure bill, it addresses everything but will fix nothing, and which is typical, right? And there's people out there that are listening to this that are getting mad what I'm saying because they believe in government. They believe that these people actually know what they're doing, and that this is the way we should proceed. It's an interesting article. I'll put it in the show notes by a guy I follow. He goes by his blog is called the Manhattan Contrarian. He lives in New York City, and he's writes about he's not a statist, and he kind of did a pretty good article about this is the path that many other countries have went down. Weimar republics, Poland, Austria, Hungary after World War I, and they had tremendous inflations. You can't just deficit spend. You can't just spend money that you don't have and then just print it up. And that's what we're doing. This money is not being taxed from anyone. This money is just being created out of thin air. The Federal Reserve is buying $80 billion in treasury securities a month and $40 billion in mortgage-backed securities a month. Okay. And where is it getting the money to do that? It's just creating it out of thin air. And where is the money coming from to pay for all of this COVID relief? Now, the argument can be made and has been made, and I guess I'm empathetic to it, that, well, the government shut the world down, shut the economy down. They have a responsibility. But who is the government? It's not this, people have this view. It's just like this entity that's over here off to the side that has this cornucopia of non-ending resources. It doesn't have any resources. Anything that it has to take from everybody else. And then it redistributes based on the political situation that's current at that time in government. And they don't necessarily have to tax. Creating money out of thin air is slowly going to destroy the currency over time. You cannot do that. It's demonstrable. If that was the way you could run things, then why doesn't everybody do that? Why hasn't that been the success model? It's just got, that's the thing that I got out of Stephanie Kelton's book. She seems to, I've listened to her interviews, I've read her book. And what I don't understand, she's the big proponent of MMT. The Deficit Myth is the name of the book, which I suggest you read because it's not a bad read. She's a very good writer, and she writes it in a way that it's easy to understand. But what she says basically, or she doesn't seem to understand, is that I think she thinks that her and her colleagues that came up with this MMT idea think that they stumbled on something that no one else had ever thought of. That's the impression I get when I read that. I don't know this person, but that's the impression I get. And this childlike thing, like they're so smart, and nobody for 10,000 years of civilization has ever thought that, hey, why don't we just print money out of thin air because we have the reserve currency, we issue our own currency, so it doesn't really matter. And this person has a PhD in economics. So you see, I don't have a PhD. I've been told my whole life, whenever I've tried to apply common sense or street smarts to something, shut your mouth. You don't have an advanced education. I don't know, but I've been doing pretty good so far. And like I said earlier in this discussion, everything that these people have touched turns to crap. Everything. They've mucked up everything. And the people that are going to pay are you, the average person. Because this is going to feel good at first, just like when you give a kid a pixie stick full of sugar candy. He bounces around the walls, runs around nuts, Okay. And then what inevitably happens when the sugar wears off, he collapses on the couch or in his bed and he's asleep. And you're grateful because the nuttiness has stopped. The problem is that's funny and we get some enjoyment out of that, seeing the antics. This is not going to be funny. People's lives are going to be affected. Just because something is certain doesn't mean it's imminent. And that's the problem. People's time horizons, they say, well, what are you talking about? Nothing has ever happened. And that's the false trap that people fall into. You can look at the history. You cannot just create wealth out of nothing. There's no perpetual motion machines. There's nothing for free. And there are consequences to making bad decisions. So again, I can sit here and crab about this and get off my lawn, you kids, and all that stuff, and play the old man that's screaming at the moon. It doesn't do any good. This is what's happening. You need to be aware of it. You need to understand that this has been done before and what happens when it does happen. You have a currency that loses its value. You have economic stagnation. You have falling living standards. That will be the end result. Initially, even in Venezuela, when they started this, it was fine at first. It was fine in the Weimar Republic. Everybody thought they were getting rich in the markets. Everybody was doing the same thing we're doing now. Everybody was speculating in the markets. Everybody was getting wealthy. They were cheering each other on about how wealthy they were getting. Doesn't it sound similar? Read When Money Dies. All you have to do is change the names. It's the same type of thought process and conversations that we're having today, that people just think, wow, this is great. This is, but in the end, it doesn't end. And then the problem is that once you start down this road, you can't stop now, because if you stop, you'll have a deflationary collapse. And so I think the powers that be, they know this, I think. Well, I hope they know this. And I think they just hope that it doesn't go to pot on their, I don't know. I've given this a lot of thought. I really don't know what they think at this point. They may be that naive. They may be that malicious. I just don't know. So, this is the reality check. This is what's happening. This is what's going to happen. There's going to be an opportunity for us as speculators, to take advantage of this, to take advantage of the infrastructure spending, wasteful spending that's going to happen. And we hope to do that. But we're going to have to get out. We have a train barreling down the tracks, and we can only stand in the. We got to know when to get off this, get out of the way, so we don't get run over. So, let's talk about gold. Gold. You think, well, man, with all this stuff going on, why isn't gold performing better? Well, we're in a secular bull market for gold. I maintain that. And during bull markets, you have pullbacks. We've had a pullback. Back in August, when gold cracked 2,000 an ounce, it became overbought. It became another tourist trap, right? All the tourists, hot money tourists, came in, and the gold stocks and gold got ahead of themselves. So we've said before that real interest rates drive gold stocks, or gold and gold stocks, or gold and then gold stocks follow on from the price of gold, obviously. But this is another thing that I like to look at. This is another reason why I follow Twitter. Somebody put this up on Twitter. I think I got this off of Cuppy's Twitter feed. Anyways, this shows the Hulbert Gold Newsletter Sentiment Index, which is in red. And you can see that there's two ranges. At the bottom is when you would say that sentiment is very negative, and at the top you would see when sentiment is very positive. This only goes back to 2018. I didn't have time to go try to dig this up and do more investigation. But typically, when even the gold newsletter people are very negative, and that's their market, that's what they write their newsletters about, that's what this is tracking, right? So you're down here at a level that's the lowest it's been in 3 years as far as sentiment among gold newsletter writers, okay? Who else is going to get negative if even the gold newsletter writers are negative? So the point is that when sentiment gets to extremes, that's usually a buying opportunity. I didn't put the chart up, but there was another part to this chart that showed what happens in the subsequent 3, 6 month, and year timeframes when you get to these levels of negative sentiment, and you usually have a positive increase in gold and gold stocks. So I don't know what the gold bull market's over. I'm maintaining this, interest rates move faster than the reported statistics on inflation. As we've talked about before, real interest rates are the difference between the 10-year treasury and the CPI. CPI is manipulated anyways, but we'll use CPI. And so, treasury rates have increased quite a bit because of the anticipation of the recovery in the economy. And the inflation rates have not. They only come out once a month and they're lagging indicators. So I think it'll take some time for the inflation to indicators to catch up. And when they do, I think rates will then move back, start moving more negative again. I think they're still basically negative, but they've become less negative. So direction of the rate of change is important in addition to the actual interest rate, real rate. So this is just something to look at. I wouldn't base my whole trading on it, but if you have become, it's not fun watching things grind lower. You're like, well, I'm going to move on to the next thing. But nothing's really changed that are the fundamentals around gold, right? I just went over the tremendous amount of government spending, the debt, the necessity for the, whole world basically, or most of the world's trapped in this debt bubble that they have, no way of getting out of except for inflating the debt away. That's been the historical narrative. Whether you want to look anywhere throughout history, it repeats. When governments become too indebted, they inflate the debt away. So, um, if you look in the context of the short term, then you would be depressed about the gold price. I would say that even at gold, I think is around 1730 an ounce right now. Even at those levels, I mean, the gold miners are making tremendous amounts of money. They're showing discipline. They're not going out and going nuts like they did during the last gold bull market. And it's healthy to have corrections, and it just sets the stage for the next move upward. If I saw that the government was going to get spending under control, the Federal Reserve was going to normalize rates, yes, we would be selling gold. I don't see any of that. I don't see anything that would be gold negative. We do have an overwhelming amount, inflation and deflationary forces are fighting with each other. They have to keep the money pump going, obviously, because the deflationary forces are out there, old populations, the debt bubble. Okay. These things, technological advance, lowering prices for things. That's tugging on prices. Okay. That's a overall bias of deflation. But believe me, I do believe, as Milton Friedman said, that if they want inflation, they can print enough money to get inflation. And I believe that. So this is an article from Bloomberg. I will put a link to it. This is going to be really energy intensive the rest of the way here this week in the video. U.S. shale production to erode further. U.S. shale production is set to decline through at least 2022 as explorers resist the temptation to start drilling again despite a rally in crude prices. So crude has rallied. We're over $60 a barrel again because of the positive or perception of positive comments from the OPEC meeting last week. And I have a view that oil prices are going a lot higher and over the next couple of years. And I think that we could see $75, $80 a barrel at the end of this year. And will shale respond? We'll have to see. That's a question we have to ask. Currently, they are saying we've seen rigs increase, but not sufficient enough to turn around the decline. If oil goes to $80, $100 a barrel, we'll see what happens. We'll have to reassess. But right now, they are pretty much staying true to their staying within cash flows, paying down debt, and doing things of this nature. Article goes on to say, as most drillers continue to focus on paying down debt and returning capital to shareholders instead of pursuing growth, production in the 5 major U.S. oil shale plays may shrink another 485,000 barrels a day by the end of this year, finishing December with a 7.1 million barrels a day. The 5 major U.S. shale plays, the Permian, Eagle Ford, Bakken, Niobra, and Anadarko, produced a combined 7.2 million barrels a day in the first quarter of this year, about 68% of total U.S. oil output. A year ago, those plays produced a collective 8.9 million barrels. So we're already down 1.7 million barrels in the shale plays. And this analysis is saying that by year end, we could be down another 500,000 barrels. In the context of a rising demand and OPEC discipline, to me, that's going to lead to higher oil prices. Well, like I said, we'll have to reassess this. We'll have to see if, you know, I've I've been an advocate, and I've said this many times, guys. Watch what people do, not what they say. Right now, they're saying and doing that they're not going to expand production. We'll see if that changes. The we'll see if the money's there to finance it. We'll see if people want to go through a third iteration of spending money on drilling oil wells that don't produce any cash flow. That may be possible. I don't think it is, but we'll see. Okay, this is something I've been talking about, and this is happening a lot faster, I think, than most people anticipated. This is another reason why I'm extremely bullish on oil prices. They had a U.S. aviation summit last week. The United Airlines CEO says domestic leisure travel demand has almost entirely recovered. Quote, business demand is still down over 80%. And of course, international borders, particularly long haul, are still closed. So those are huge chunks of our business that are still almost at zero. But it's really nice to see that recovery. Alaska Airlines CEO was similarly optimistic, noting that the airline would earn positive cash flow for the month. United is flying more than 100% of its 2019 capacity to Mexico, the Caribbean, and Central America and South America, where some countries have reopened to Americans. Um, Look, the vaccinations, the whole thesis that we had, whether I'm not going to get into vaccinations, whether you believe in them or not, people are getting vaccinated, they're booking travel, they've been told they're going to be able to travel. That's the carrot, okay, that's been put out there. We'll see if what we're still seeing plunging cases. Everything's going in the right direction, and there are pockets around the world, no doubt. Brazil's having a hard time, and but we'll see. This is happening a lot faster, I think, than people anticipated, and like you says, you're already over 100% of their 2019 capacity to the Caribbean and Mexico. You've seen pictures on Twitter, I'm sure, of the crowded airports and people packed in Cancun and these places. Okay. So it's happening. It's going to continue to happen. I don't see anything unless we have this big surge backwards. I just don't see that. Okay. But we'll see. So far, the wind is at our back on this. And I think this is happening a lot faster than most people thought. So, Open Insights is a newsletter I get. It's free. I'm going to put a link to their Seeking Alpha article, but they have a very good article where they are talking about all of these things. Like I said, guys, you got to follow smart people. There's so many smart people out there. This article is really great if you are bullish on oil, if you want to understand why you should get bullish on oil. But they make the call or the questions asked, is there going to be an energy crisis in 11 months? Or I think the name of the article is 11 months to an energy crisis. But anyways, basically the high points, energy prices and equities continue to consolidate as reflation trade and investor interest drove prices ahead of fundamentals. Yes, we're seeing that also. We had this big move higher in oil stocks prices, but they're consolidating. But I think with the oil price moving higher later into the year, we're just in spring now. Spring's starting to happen. We get into the summer travel season. I believe oil demand is going to explode. Oil demand continues to recover globally despite increased COVID cases in Europe. Anticipate OPEC plus Russia to hold firm on its production cut this week and energy prices / equities to further consolidate and then climb higher into the summer. In fact, that's exactly what happened at the OPEC meeting. Positive comments came out. Yes, they're going to increase production slightly, but they are not going to flood the market. That's what people wanted to hear. So if we get a demand pickup, and I just went over the fact that travel is coming back, positive comments. We haven't even got into the summer travel season. People are going to be driving all over the U.S. Forget about it. I mean, it's going to happen. People want to get out of their houses. It's going to be, I think it's going to be a record travel season, at least in the U.S. The This article goes back and rehashes some of the things that they said before, previous in the year, and the same, and why they feel there's going to be an energy crisis sooner rather than later. Uh, and oil prices could conceivably go over $100 a barrel. I'm not sure I agree 100% on the timeline, but I do think, you know, 18 months, 2 to 3 years out, we are going to be over $100 a barrel. That's not even in question in my mind, just because of the underinvestment. They go into that in the article. Okay, here's a chart that's in the article. It's also been going around Twitter. If you don't follow Eric Nuttall at 9 Point Partners on Twitter, you're stupid. I mean, this guy this is what he does all day. He's a Canadian energy fund manager, smart guy, and he puts all kinds of great charts like this up. So here's the year over year global crude surplus onshore plus floating. So you'll note, goes by weeks, right? So here's week one, like January 1st of last year. And then, COVID started becoming into the news and becoming a problem in late February, early March. And that's when they started turning off the economy. And that's when the surpluses started increasing. Ever since about July of this year, we've seen, because of the constraints, because of the shutdowns of production, because of the pullback in investment, the drilling collapse in the U.S., you've basically seen, and what's happening with OPEC being disciplined, the surplus has shrunk. We're almost back down to normal levels. Okay, and this is why oil prices are trading above $60 a barrel. So basically, global inventory has fallen by 347 million barrels, 78% in 26 weeks. That's 1.9 million barrels a day, year over year tightness. So that's about what the shales have compressed also. So increased demand running into constrained supply means higher prices. Expect more of that. Follow Eric Nuttall on Twitter. Very smart guy. Follow Contrarian888 on Twitter. These are smart people. Follow, start that cultivating this group of smart analyst type people that know what they're talking about. So I don't want to get too far into this because it starts veering into political and personal opinions, but I just want to put this out. This was another thing I cribbed off Twitter. It's from a newsletter or a report that somebody wrote. Alex Barrow, I think is the guy's name, but I got this from Contrarian8888's Twitter feed, and it goes talking about Vaclav Smil's predict. This is what I get into. Looking at energy consumption by developed countries, the United States, Europe, Japan, South Korea, places like this. Then looking at these large populations in places like China, India, Indonesia, okay, all these places that are developing, Africa, okay. And when you start applying, as people start moving from the poor classes, going through their S curves, becoming wealthier as their countries urbanize and industrialize, that has to be facilitated by energy. Energy underpins everything. Energy is an input component into everything. Okay? Whether it's oil, coal, nuclear, electricity, renewables, whatever, some kind of input has to go into everything, energy input. Okay? That's just the bottom line. Growing crops, right? Requires machinery, but it also requires inputs from the sun itself. Okay? So this is forgotten by most people. People have this home country bias, this looking at themselves or just their own little world, and they don't extrapolate. They're not good at doing that. And so the point I'm making is that if you think that demand's going down, you're nuts. And that's really the goal that they're talking about in the Great Reset and this New World Order. They're talking about, as part of their plans, to get to a 2050 carbon neutral, whatever that means. We've already went over that. We don't even know what that means. You have to reduce energy consumption. Well, how's that going to happen as these people around the world? It doesn't mean reducing, everybody says that. We have to reduce energy consumption. We have to become more efficient. Well, move out of your 2,800 square foot house in the suburbs. We can do that. We'll level everything and we'll go Soviet style. We'll go Soviet block apartments. Everybody will get a certain allotment of square meters and you'll all ride public transportation. Hell no, no one wants to do that. But the rest of the world's supposed to do that? I mean, the cognitive dissonance among most people is, well, I find it amusing at this point, but it's tradable, it's actionable. Let's look what Vaclav Smil says. With less than a sixth of all humanity enjoying the benefits of the high energy civilization, you know, the one we live in, the one that most of you guys that are listening to, that we live in and enjoy, that you like, the conveniences, a third of it, let's go back. With less than a sixth of all humanity enjoying the benefits of a high energy civilization, a third of it is now engaged in a frantic race to join that minority. And more than half of the world's population has yet to begin this ascent. The potential need for more energy is thus enormous. The utterly impossible option is to extend the benefits of two North American high energy societies to the rest of the world. So going from 330 million people to 6.5 billion people, and that's just in 2005. It's more now. So this is like an older discussion, like a decade ago, but it's applicable today. This would require nearly 2.3, I don't know if that's zillion joules of primary energy, or slightly more than 5 times the current global supply. 5 times the current global supply. Now do you get why that there's going to be a great reset? Now do you understand why that they have a virus that they locked you all down for, that 99.8% of the people survive and it's not a big deal? Because there's not enough resources for everyone. That's why. There's too many people and we live on a ball. That's what the elites, that's their mindset. There are too many of the other Untermenschen, okay, under people, under men, okay, the great unwashed that are consuming resources. There's not going to be enough for us, the great world beaters, the masters of the universe. Okay, it sounds dystopian. It sounds like a cheap movie, a spy movie, Goldfinger or something. But that's what it is. You know, back when I was younger, I didn't believe in conspiracy theories. You know, I was open minded. I felt most people were good intentioned. Well, that's wrong. They're not. And people all throughout history, if you read history, have done nothing. People of wealth and power have always conspired to gain more wealth and power and to make sure that their position of wealth and power is not challenged. Now, do you start to see what this is all about? It has nothing to do with a virus. They've proved they can lock you down for a virus that 99.8% or 7% of the people survive. Now they can lock you down for the next crisis, climate change, right? That's how we reduce consumption. We tell you that the earth's going to burn up, and you've already demonstrated that you'll sit in your house. See how it works? Maybe I'm wrong. Maybe I'm not. We'll see. But we're not going to be able to increase the energy production in the world 5 times. It's not possible. The resources don't exist. So Lynn Good, the CEO of Duke Energy, knows this. This is what she said. The company has set a goal of net zero carbon emissions by 2050. CEO Lynn Good also said Duke must build more renewable power. So Duke Energy, one of the biggest U.S. power companies, isn't going to reach its carbon cutting goals without the help of a controversial source, nuclear power. That's according to Chief Executive Officer Lynn Good, who spoke Tuesday at a panel called The Future of Energy. Nuclear power is relatively expensive, and some environmental groups worry about accidents and the storing of spent fuel, which is dangerous. Actually, it's not dangerous if it's done correctly. This is, a couple canards that are in here. This is typical of why nuclear energy has been retarded in its growth, because we have these canards that are allowed to stand. Still, it's the only source of carbon-free power that can run around the clock. Exactly. Here's what Lynn Good, the CEO of the largest utility in the U.S., said. The safety record here in the U.S. is extraordinarily strong. Frankly, I don't see a way for us to reach our carbon goals without nuclear being part of the equation. So, it's all about base load, guys. The, you know, I don't really have a position anymore. I really don't care about, the realization saying in you cannot run industrial technical civilizations on intermittent sources of power. You have to have base load. And nuclear, if you want to do that without burning coal, without burning natural gas, you're going to have this extremely large nuclear build out. And I believe that's going to happen. The Biden administration's on top of it. Okay. They agree. There, more and more news is coming out every day. This is the one thing I do agree with them. This might be the best thing that ever happened. If they would take some of that $2 trillion infrastructure bill, devote $1 trillion to it to building nuclear plants, you'd solve a whole bunch of problems. You'd create, build 100 brand new fourth generation modern nuclear plants in the U.S. What would you do? You'd have all kinds of STEM jobs, engineering, science, technology, high paying craft jobs to build the things. They take 3 to 4 years to build. Uh, Very high skilled, high paid operator and maintenance position jobs. Plus, you would create a whole underlying infrastructure of support companies and company manufacturing because it's very technical manufacturing. Okay. So for components and, mandate that this has to be done in the US. We have the capabilities. I mean, that would touch off a boom like you wouldn't believe, and it would also reach the goals. I could get behind that. So, I think that's where we're moving anyways, regardless. It's just gonna take longer, and people are gonna look back and say, "Gee, why did it take us that long to really realize that?" But I think that's probably what's gonna end up happening. All right, guys, that's it for this week. Thanks for your listening. I know I got a little bit radical with you, but I'm not trying to be a conspiracy nut, but think it out in your mind. What's really going on here? You know, we live on a dirt ball. Uh, there's a limited amount of resources, but there's an expanding amount of demand. It's unlimited demand for resources. Think about it. Okay, is it a possibility that that's really the real agenda? It could be. All right, that's it for this week. Talk to you next week.